In this video, I want to talk about what I consider the ultimate swing trading strategy for beginners. Now, you don't have to be a beginner to use this strategy. I still use it quite often. A swing trade is usually a trade overnight or over multiple days or weeks. It can even be months depending on the technical analysis that you use. And it's usually technical analysis that you'll implement for swing trades. Now, for the SPY T swing trade, we just use the up or down signals that SPY Tomorrow gives us. But you can also use the MACD. You can use moving averages. There are a number of money flow situations you could consider. Supply demand may be an option for you. There are a number of approaches that are rather popular today that you can use for swing trades. Now, the one that I recommend is SPY T because it's a good way to learn because it's overnight. Now, eventually you may develop other strategies that are longer term, but I like the overnight element because one, it gets you out of day trading because day trading is so tough. Doesn't mean you can't make money day trading, but it gets very emotional, and a lot of times people will cut their profits short and let their losses run, where when you do the swing trading methodologies, you take less of that emotion out, at least in between the points in time in which you would buy and sell. And that's really important. You put on the buy usually at the end of the day and you sell in the morning. And what I recommend for beginners specifically is that maybe you consider what we have as a confidence level. If you're a member of, say, SPY Tomorrow, you don't have to be, but if you don't have a lot of confidence, I would recommend just a confidence level of 1. If you're a part of SPY Tomorrow, you have access to the SPY confidence levels from 1 to 27. It usually doesn't get much higher than 20. Once you understand or have confidence in your signals, you can use different position sizes based on the strength of the signal, which can be very helpful. A good position size may be 1% or 2% of your portfolio, maybe 5 or 10% of the portfolio, depending how aggressive you are. I have methodologies that are even much higher than that. But if you go higher than that, you might want to have some insurance. In other words, if you're buying options, for example, if you buy SPY options, you may want to buy 2 if the signal says the market's going up and it's going to be up the next morning. You may want to buy 2 calls and 1 put, maybe representing 1/3 of the overall buy. That way, if it goes up, you're going to cap some of your profit. It won't be as high as if you just went directional. However, if it goes down or crashes, you could break even or even end up with a little extra money. Maybe it drops down in the beginning and you can sell your put, and then it goes back up and you can sell your call and you can make even more money that way. So you have multiple directions in which you can profit or at least save yourself from a deep loss, or as deep as it could have been if everything crashes when you're expecting the market to go up and, well, it went down. So what I'm getting at is if you're a beginner, definitely make sure that you're protecting yourself in some way. Of course, there are many ways in which you can approach different signals. You can buy calls, you can sell calls, you can sell combinations of both buying and selling, and there are many complex methods in which you can go about it. However, in the beginning, you should keep it simple because sometimes those trades can take some doing to unwind, and you want to make sure you really understand what you need to do. So keep it simple. Maybe do a directional trade, but if you do it, make it small. If you make a little bit bigger trade, make sure you have a little of insurance, and if it says it's going to be down tomorrow, whatever your signal may be, then make sure you buy a call too. And that way, if it does go up, you won't lose as much money. So let me know what you think. What is the ultimate swing trade for beginners for you? Let me see it in the comments below.